All right, we are live. So welcome back to DAP University. So this week is going to be a big week for crypto. Okay, we're going to talk about that, what you need to understand. We're going to look at a lot of the news updates that have happened in the space since our live stream that we did on Thursday. We normally do these live streams Monday through Friday. Couldn't be with you Friday. So thanks everybody who showed back up on the streams today. Just subscribe, turn on notifications. You'll find out about these streams whenever we go live. We're going to answer some of your questions, check on the crypto markets, and a lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to know how to master blockchain step-by-step, start to finish, then head on over to dapuniversity.com/bootcamp start today. So we got people jumping in the chat here. We got Patrick, Technically, Austin, Neal, Automatic Beats, Culture Highs, Lee Robert with the new NFT, Robert Smith, the Native. All right, Chris, welcome. All right, so this week is likely going to be a very big week from crypto. Okay, we actually got some news about this last week. We weren't able to cover in our streams because we didn't do our stream on Friday. But we have, news of an executive order in the United States that's gonna come out about cryptocurrencies this week and what you need to understand about this and what impact this could possibly have. Okay, so we're gonna jump into this first. We got a lot of the news updates we want to talk about from this space. But let's go ahead and jump into this. I'm gonna pull this story up on my screen here. I'm also going to bring up my co-host Walshy on the channel here. So if you're guys have just tuned in back in the streams the first time in the last several weeks, I've got Walshy here helping me prep for these streams, helping me add a lot of value to what we're doing here at DAP University. And if you have anything you want to talk about, then definitely ping him on Twitter. You can see his Twitter handle there. It's at WalshyNFG. You can see it right there. Awesome. So let's jump into this. So President Biden in the United States is is issuing a crypto oversight executive order this week. All right, so let's jump into this and talk about some of the details. We don't know exactly what this is going to entail, but we have some insight into what it might be. All right, I want to talk about if that's even true. What could that mean for the entire crypto space? So President Biden is expected to issue an executive order next week. So this was written last week. So this week that we're talking about now, directing agencies across the government to study cryptocurrencies and a central bank digital currency and come up with a government-wide strategy to regulate digital assets. Okay. So according to an administration familiar with the matter, the forthcoming directive will commission a study of a central bank digital currency, ask a range of agencies, including Department of Treasury, Justice, and Homeland Security, to develop a report on the future of money and payment systems. So meanwhile, the Director of Offices Science and Tech Policy will do a technical evaluation of what might be needed to support a CBD system. All right. So there's two important things that we want to break down and talk about individually. One is the creation of a central bank digital currency in the United States. And number two is crypto regulations. So, Walshy, correct me if I'm wrong here, but first of all, we started to see a push for central bank digital currencies inside the United States towards the end of last year. Okay, we saw a paper come out from the Federal Reserve saying that they were pursuing researching a central bank digital currency and what an implementation of that could look like. Right, that's the gist of what that said. And correct me if I'm wrong, Archie, here, but it seems like that was, slated in their priorities for this year, but this executive order is essentially accelerated that. Is that right?
Yeah, that's absolutely right. You're completely correct. Previously, the actual regulation was set to really take place later this year. No exact timetable, of course, because that's just how the government works. But there's a lot of speculation around like Q3, maybe late Q2, like June, July. But obviously, with what happened last week with Ukraine and Russia and them legalizing Bitcoin to be legal tender in their countries, it's expedited the matter itself, obviously exponentially over here in the United States. And so obviously this executive order is speeding things up, allowing things to accelerate rather fast. And we're going to see all this culminate this week, which is quite exciting to see.
Right, totally. So let's continue on with this. Some about central bank digital currencies and also regulations, because really these things are tied hand in hand. We're going to talk about what a CBDC is and what its implications are. for other cryptos, all right? We're talking about regulations as well, because that's a really important part, because lack of regulations on crypto, or very clear regulations on crypto, is one thing that's probably holding a lot of people back from participating in crypto. And so it's important that we get this regulatory clarity. I'll talk about my feelings on regulations and why we need them, or if we don't need them, here in a minute. But let's talk about what is a central bank digital currency. So, central bank digital currencies are essentially cryptocurrencies that are, that are controlled by a central. It's hard to define the word without using the words themselves. All right, but basically, it's a digital currency that's issued by a government. All right, and they control the issuance of the coins for that currency. And typically, it's just to back up whatever your normal currency is now. So basically, my assumption here is that if this is in the United States, we're just going to have like a central bank digital dollar. Okay, that's pegged to the U.S. dollar. So what are some of the impetuses for the creation of something like this? All right. So that's what you talked about. We're seeing lots of other countries across the world adopt crypto as valid payment mechanism in their country. We're also seeing other countries issue central bank digital currencies that are different from cryptocurrencies. And part of it is a trend, all right, and staying on top of the trend, and what happens if you don't jump on that trend? Where does that leave you, on the global scene, all right? The other major thing is central bank digital currencies offer certain benefits to governments that dollars don't right now. And this is one thing that people worry about with central bank digital currencies a lot of way, who are crypto users right now, is basically the ability to track people and what they do, right? So there's a possibility that if you have a central bank digital currency, like you would bank directly, you could bank directly with the issuer of that currency, aka the government, rather than a private bank. I guess what I mean by that is just having a bank, whatever bank account you have now. So, that's something we don't like, in the crypto space, because we're trying to get away from that. We're trying to create more decentralized financial systems where we can custody our own funds, right? And so that's one big objection to CBDCs in the crypto space, is I think people think the anti-crypto. And so, think about Bitcoin, for example. It's a completely borderless, peer-to-peer digital cash system. And then you have a central bank digital currency, which is very centralized, and issued by a central entity. And, it's really the opposite of that, right? So I guess the last big question mark here is, how is this going to get implemented? And that's one thing that's going to be really important to see that comes out of this. I don't know if we're going to get details this week on this, but a lot of people want to know, how is the CBDC going to be implemented? Is it going to be on their own blockchain? Are they going to create their own digital ledger? Is it even going to use blockchain in the first place? All right. And if it does, could it potentially even use public blockchain infrastructure, right? Could they create a central bank digital currency that is like, one of the existing stable coins out there, where they essentially build a token on top of public blockchain infrastructure, but then they control the token itself? All right, that's a distinct possibility. And what could that do for the utilization of that particular technology? All right. We don't yet know the answer to that question. That's one thing that's going to be really interesting to see about the results of this, research, and what they think is going to happen, right? So, the other thing I'll say is this. Let's flip over to the regulation side of things, because this is another pretty critical aspect of what's coming out here. Is like, we see the push towards central bank digital currency, expediting that, right? That's one side of this. The other side is regulations. All right. So regulation has been a big question mark in crypto. It's been holding a lot of people back from participating in cryptocurrency world because of lack of regulations. Because the last thing they want to do is jump into crypto, then a bunch of regulations get piled on, where they are now, it makes the market overall less valuable, and maybe that tanks the value of their assets, and so they lose money that way. Or maybe cumbersome regulations get placed on them to where they cannot access their funds in the same way, or without paying a certain amount of taxes that they didn't know they were going to have to pay initially, right? There's lots of reasons why that's, friction from a lot of people jumping into space. So regulatory clarity will be potentially a net positive, in my opinion, moving forward. All right. Talk about my sort of philosophy on regulations here in a minute. All right. But Let's talk about what the most likely regulations would be in this case, how I'm reading into this situation. Again, this is somewhat speculation on my part. I don't have any inside information on this. This is me just kind of connecting the dots. Let's think about all the possible things you could regulate in crypto world, all the way from Bitcoin to, security tokens, right? All the way up to like stable coins, for example, and NFT. There's lots of different things sort of in that likelihood ladder, where I'd think like the least likely thing, maybe towards the bottom end of the ladder, would be like NFTs, because it's hard to say that a lot of these NFTs would be securities, all the way up to something like security tokens, which are probably like the most obvious thing to regulate, because like, hey, you're just trying to issue stocks on a blockchain. So maybe just below that, I would think that a top priority thing to regulate in terms of this effort would be actual stable coins themselves. Okay. So what's the big question mark with stable coins, privately issued stable coins, that the Fed could potentially worry about, and we can see some top priority regulations coming out on these? Well, essentially, stable coins are probably the thing that closely competes with the dollar now, right? Because basically you're saying a private issuer is literally issuing something that represents your own dollar, right? And that's something that the central bank digital currency could do. Okay, so and we see lots of incentives for private users to use USDC or a similar stablecoin, Tether, whatever it is, as opposed to actual dollars, and to use this financial system rather than the existing one. All right. So those are some reasons why I could see, a push towards regulation on those that would make the consumer, because of these regulations, incentivized to use a central bank digital currency instead of its direct competitor, which would be a privately issued stablecoin. Okay. Now, one other thing about those regulations that is likely, in my opinion, to occur is what they're worried about with the backing of the stable coins. Like, if you've been in the crypto space for a long time, or maybe you're not, you may have heard about the Tether FUD. Okay. So the Tether FUD is basically something where, Tether is a privately issued stable coin. There's been a big question mark for years and years and years about whether Tether actually has the money in its reserves that it claims that it does. Okay. So the whole issue here is, like, when you create a stable coin that's pegged to the US dollar, theoretically speaking, how does that cryptocurrency actually get its value? It's a really common question, right? How does Bitcoin get its value? Well, it trades on an open exchange, and the market sets the price. But stable coins are different, right? The markets don't set prices for stable coins in many cases, most cases, right? Like, a stable coin issuer is the one who sets the price. So what they do is basically they have assets in reserve, and theoretically speaking, you should be able to buy from the issuer and sell back to the issuer always, for every single coin, anybody, no matter how many you have, for the exact same price that you bought it from, for basically $1 if it's US dollar stable coin. So how do you make that work? Well, you keep, assets in reserve that, that back all that up. So if you have, market cap of $100 million in your privately issued stablecoin, then theoretically speaking, all those $100 million of stablecoins, if they're all in circulating supply, should theoretically be redeemable at the same time. But there's a big question mark, and there's a lot of, we don't necessarily know if you could do that. And so that's one thing that I think that the Fed is worried about, is basically preventing, or the government in general is basically saying, people could go try to issue stable coins, or like, there's lots of problems where one of these private issued stable coins could just, like, like, we could have a bad situation on our hands where all people's money just, like, goes to zero, or a lot of people try to, redeem money and it just melts down and people can't get their money back. And it's very similar to, like, the bank runs that happened about the time the Great Depression started. So that's, or we could potentially see history replay itself. And I think that's one of the things they're going to talk about. And one of the things that could regulate stable coins is to protect people from that happening, and then also have incentives to where it could use a CBDC. So that's, again, speculation. We don't know. I don't have any real clear insider information on this, but if I kind of just understand the incentives at play here between the different agencies and what's going on right now, the existing sort of, forces in the world, that seems like a likely possibility. Now, The last thing I'll say with this is with crypto regulations in general. There's lots of people who are going to be who want. Well, there's lots of people who are on the sidelines, like I was saying before, who are not participating in crypto. Where if more regulatory clarity came, that it would increase the likelihood that they would participate, right? Especially at these prices, because crypto, we have a much better risk reward ratio for entering the crypto markets now than we did, 3 or 4 months ago. So what I'll say about this regulations is, I think in general, like crypto space can do just fine without regulations. All right. But I'm a realist in thinking that, regulations are coming, whether we like it or not. And there's really nothing that we can do about it. All right. And for that reason, that the best path forward is fighting for the best, most common sense regulations we can, or said another way, the least bad, least cumbersome regulations that we possibly can. And so that's my hope out of this. It very likely could see some regulations that, cause an upset. All right. We saw this with the infrastructure bill. Like, we saw all these people saying like, we're going to tax everybody. Right. And it has all this language about, causing developers and stuff like that to be brokers. But then we've seen, basically people backpedal and say, oh, we're not going to do that. We're not going to do that. Right. So we could see some things that kind of freak people out initially, and then, sort of backpedal on those things. We see these types of things happen a lot. It's a classic negotiation. You come on strong and then you kind of back off, and it makes the final solution, more bearable, or people like kind of take a deep breath and then they live with it. All right. So that's another possibility to watch out for with this. So, we don't know for sure. A lot of speculation here, but definitely pay attention to this, because, this could be a big part of how the industry plays out over, the next several years, which is our critical years in the development of this ecosystem. So, Walsh, did I miss anything on any of that?
No, yeah, no, I think you nailed all of that. It was really well said in most of that. I think one thing to note is that the tether issue is definitely a concern for the government. They actually rejected the last Bitcoin spot ETF because of tether, saying that tether has the ability to like manipulate the markets. So I think that was important to add there, that tether is a big concern. I was actually reading a report recently about actually like having too few stable coins in the stablecoin space, and the article itself was basically outlining how like it might end up being almost monopolistic between Bitcoin or USDC and USDT, and that would actually be a bad situation, right? Like in this article's like viewpoint or whatever, it brought up the fact that like having more stable coins makes more sense from a regulatory perspective, because it's decentralizes all of that, all of the financing away from just one or two stable coins. So I thought that was really interesting. I read that, I believe it was in a Block report. And I love that idea again, because we shouldn't just relegate ourselves to just one or two stable coins, and hopefully we can make sure the industry doesn't go in that direction where it's only just one or two stable coins. And right now there's obviously a plethora out there of stable coins, and I hope to keep it that way as well.
Yeah, totally. Yeah. So do we have a date on when we think this is going to take place?
They said about a week was the executive order, and which was signed, I think, Thursday-ish of last week. And so that's our best guess. It's kind of just we're sitting on our hands at this point, right? And just waiting to see what they're going to do. It's supposed to be this week. Hopefully.
Yeah, totally. Very nebulous. We'll see what we're going to do. Somebody says we got a question in the chat: how do we code stable coins? So you can definitely check out any of those recent tutorials I've done on the channel talking about ERC20 tokens of crypto. There's lots of stable coins that function with ERC20s. Sorry, lots of stable coins that function with ERC20s. And you can basically you could create a stable coin with an ERC20 token. You just have to create some sort of mechanism where people can buy them and sell them for dollars, or have a way to actually redeem those, because that's what makes a stable coin work. So say somebody says, should have moved into stable coin in last pump while this decline happens. Let's see here. Do I see the crypto space actually standing on the principle of decentralization? It depends on the use case, in my opinion. I mean, I think just from clear empirical evidence, like there's lots of people who don't care about it as much because they can just, sort of gamble quick gains. But when we're talking about long-term infrastructure with massive players building things that need to last, they're going to care about decentralization. So let's see here. Somebody says regulation definitely coming for all assets crypto. Yeah. Let's see here.
Ultra Hive says the scenario. He says, let's imagine we see a major crash and everyone decides to convert over to stablecoins. Would that not crash the USD simultaneously due to overcirculation?
No, we don't have enough market cap. I don't think that to happen.
The global economy is something around above $190 trillion. And last I checked, and this is a live update, right now the crypto market cap is 1.8 trillion. Yeah, 1.8 trillion. I'm sourcing Blockworks for this one. 1.85. So it is, barely a fraction of the global economy right now, less than 2 trillion.
Yeah, and there's basically no scenario where everybody in crypto converts to a stable coin at the same time. All right. So also that would like the market cap of what's in there, because that's the other thing is like there's not whatever the market cap is, like 1.8. There's not actually 1.8 trillion dollars of US dollars that have flowed into the system. There's a lot of coins that aren't in circulating supply that aren't going to get sold, et cetera, et cetera. A lot of stuff sitting in smart contracts that are locked up, all that type of stuff. All right, so let's look at another thing that happened in the space this week. We'll kind of move off of regulations a little bit, but this actually could be a related topic to regulations because as we see some of these things happen, I think this kind of catches the attention of regulators. Let's talk about what happened with the OpenSea phishing attack. So this was yesterday, it looks like, right?
Yeah, it occurred yesterday. Actually occurred.
I'll let you take the lead on this one.
For sure. Yeah. It actually occurred while the CTO of OpenSea was on stage. And that's a rumor, but that's what I saw on Twitter and was lining up times, and it seemed to correlate there. So let's just hit the nitty gritty. So this was a phishing exploit. It was not a hack. A lot of people thought it was a hack initially, but again, it wasn't. It affected a total of 32 users, and I'm citing the CEO of OpenSea, Devin Finzer. He released an aftermath battle report thread, which kind of breaks everything down. A total in 2 million was lost in NFTs. This includes the Bored Ape Yacht Club, etc. So 2 million lost. Actually, the CTO of OpenSea also released a technical deep dive, which if you're in our live chat right now, I'm going to go ahead and post the link, and so you can take a look if you want to see a technical deep dive of what just happened. But again, it's pretty straightforward. It's an email phishing attack. So what's happening right now is OpenSea is going through a smart contract upgrade, and they emailed everyone, hey, you need to go ahead and update your listings. We have a new smart contract upgrade coming, etc. And it looks like the exploiter, the attacker, utilized this opportunity to initiate an attack. They used some long dormant contracts that were sitting in the system in order to initiate all of this. Here's my takeaway: it's terrible, horrible. Everyone loves OpenSea. Everyone loves trading NFTs. No one wants to see an attack on exchange ever. But what I thought was really, really nice was I was watching this occur in real time live, and not only was communication widespread from everybody, so everyone on Twitter was blazing about this. All the news websites were reporting on this. I was even watching ETH Denver, So I wasn't able to make the ETH Denver, but I watched it on Twitch. And even on ETH Denver, they were like reporting this in the chat and stuff, and people were being like, "Hey, be aware of this," right? So it was really nice and wholesome to see the community come together very quickly in order to resolve this and make sure everyone was aware of this, and make sure that no one was left like unnotified of what actually occurred here. So I really liked that. I thought it was wholesome. It painted a really nice picture of how our community operates together as one when something big does occur. So I love that. That was a really great take.
Yeah, totally. And so, I mean, it looks like, somebody's talking about this is just a phishing scheme. So my question is, were they able to actually, were they able to send out emails from like an OpenSea domain, or was it just something entirely different? My guess is it's something entirely different. There are ways to spoof email addresses, but I don't know if anybody has any details on whether it actually came from an OpenSea email address or not.
I'm actually not clear on that. Yeah, I'd love to hear. I'll actually check my email now. Let's see if I got one. Maybe it's in there. I'm not 1,000% sure though. It would make sense though if they did spoof the email, the OpenSea website's domain, and just fill in all the keywords about how migrate your contracts now, smart contract upgrade, make sure you get it done.
Right.
But I'm not 100% there, so I don't want to just sound off, right?
Yeah, totally. And even then, it's like, um, it's one of those tricky things where there's ways for basically people to send out emails like that, right? They could spoof the email, they could gain access to some sort of SMTP sending service. That's basically hacking somebody's account at some level, because we've seen that happen, right? We've seen people get access to Twitter accounts, right, and put out do Bitcoin scams. We saw that, I think was it last year, or was it in 2020, right? We saw everybody plaster sending Bitcoin to a specific wallet, right? From like lots of people's accounts. Like it was from like Joe Biden's account and a bunch of other people back in 2020. Now, if I remember the details of that incident correctly, I can't remember if it was somebody who actually had internal access at Twitter, or if it was somebody who was able to access accounts through basically having access to passwords or whatever. I can't remember, to tell you the truth. But there's, if we can control people's accounts, then there's lots of risks. And so you got to be careful on Twitter. You have to be careful in crypto, because you get an email, you think it's legit, it's from the right email address, all that type of stuff. You might even check on Twitter, and what if they got access to the email and Twitter, right? You could run a pretty lucrative scam in this case. I mean, I'm laughing, it's not funny, but yeah, you gotta watch out.
Yeah, certainly. I feel privileged because I grew up in the era of the internet, of the 1995 to 2005 internet, where you had to be really careful about everything you were clicking on back then, utilizing peer-to-peer services, whether it was Kazaa or LimeWire, right? You just wanted to make sure you weren't downloading viruses. You always double check to make sure whatever you were following was the correct thing to follow. So, I mean, I feel like it helped battle test me, get me battle ready for these types of environments, these types of situations that occurred.
Yeah. And there's lots of definitely, people kind of become a little too complacent. I think online with a lot of their activity, it's like, think about how much has changed over the past 20 years online activity. I think, people just get more comfortable doing things that, in a million years you would not have done, 10, 20 years. That statement doesn't make any sense. In a million years, you wouldn't do something you would have done 20 years ago. But basically, what I mean by that is you would have never done, lots of things we do now. Like how many, if you were, around, maybe you were a teenager, kid, whatever, online in like the 90s or like really early 2000s, right? Like your parents would have said, like, never put a picture of yourself online, right? Like that's, and we do that all the time. Never like post information about yourself online. We do it all the time, right? Like never get romantically interested in somebody online. People do it all the time, right? Never put your credit card into a website, right? And then that's like the primary mode by which we buy things now in many cases. A lot has changed, but that's also made people, quicker to just like do things that they wouldn't have done before. And I think part of what crypto forces you to do is start to like watch out, watch that next step, because nobody's going to bail you out. And that's definitely more like libertarian philosophy on how to run something, right? Like in that line of thinking, like consumers basically like the whole the whole libertarian idea of lack of regulation is it actually makes people more careful in many ways, because if you just have all these regulations where you're going to bail people out when they don't think before they act. But if you're in a situation like crypto, which is by nature is very libertarian because there is no government in the middle like bailing you out of a lot of stuff, then people are forced to essentially you know like you're just not going to survive if you don't like think one or two steps ahead. And sadly, in many cases, there are lots of casualties and fatalities, for not doing that.
Yeah, stay diligent, everybody. Remember, it's a beautiful ecosystem, but it's still very nascent, and because of that, you have to stay vigilant at all times. You want to do one optimistic news piece before we head out?
Sure. What's that?
We'll keep it quick, but so FTX US has announced that they're launching FTX Gaming. Some more gaming news. Love gaming news. FTX Gaming itself is aiming to help studios integrate, Web3 to interfaces and NFTs into their games. They're calling it crypto as a service platform. The idea, let's just say Ubisoft makes a game, they'd go to FTX Gaming to help get an NFT and coins or tokens set up. So that's a pretty cool idea. Bloomberg is reporting that the gaming industry currently is about 173 billion, and by 2026 it's projected to hit 314 billion. Thanks Paul Flanga for that. And then last month, FTX US President Brett Harrison signaled that companies of FTX's huge lift into blockchain gaming, and just reinforcing the point that they're going to stick with it, that blockchain gaming is the future, and that there's going to be a lot of investments and opportunity this year related to blockchain gaming. So lots of regulatory news and all that other FUD, but hey, let's just end positively, guys. Blockchain gaming is going to be huge, and we are very, very early there.
Yeah, totally. All right, everybody. Great stream. As always, smash that like button down below. Subscribe to this channel if you haven't already. That really helps these videos out so more people can learn about this entire space. If you got anything you want to talk about on our streams, definitely ping Walshy on Twitter. You can see his handle there right below his picture. We'll be taking in those ideas, and something really works for these streams. We're happy to talk about it. If you're as fast in this technology as I am, you want to get your hands dirty, and how can you get started today? You go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a masterstroke entirely, I can show you become a blockchain master step-by-step, start to finish, over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. And until next time, thanks for watching Dapp University.